All right, everyone. My name is Jeff Wilde, and I am super excited to share this novice guide to Japanese candlestick trading. Okay, it's a quick start guide. Now, please keep in mind, it is geared for those of you who are brand new, but I'm also going to share some tips later on that you may not know, even if you've been trading for years. Okay, so, bear with me, and also bear with me on the slower things because I need to get everybody up to speed. So with that said, let's jump right in. So here's what you're going to learn today. I'm going to teach you 3 of the top candlestick patterns. There are quite a few out there. I believe there's 40 plus, but I want to share 3 that I really like that offer a high probability for success. And the cool thing is, once you learn how to find these trades, it's very fast and easy. All right, there's no hassles, no second guessing. And I'm going to give you some step-by-step information that really makes the whole process painless. And once again, even if you're new, you're going to be able to find these in no time. All right, so let's get started. And I love this little saying here: life is too short to waste time hating your job, so day trade instead. So this is the most basic fundamentals of Japanese candlesticks, and as I mentioned a minute ago, if you've been at this for a while, please kind of ignore this a little bit. It only take me a minute or two to get through, but for those of you who are new, you have to understand this basic concept of what a Japanese candlestick bar is. So what we have here, there's several parts to a candlestick. All right, there's the red part here, or the green part, is what's called the body of the candlestick. Okay. The bottom part is where the market opened. That's the first price that the market traded at. It's the opening price. And the top part of the body is where it closed. Okay. Now, if the bar is green, that represents a bullish candlestick. And a bullish candlestick means that it closed higher. Okay, it gained more value. Now the opposite is true. On a bearish bar, the opening price starts up high, but it sells off and closes lower. That's the sign that it's a bearish candlestick. Now please keep in mind that the colors aren't written in stone. You may choose that, let's say, your bullish bars are black and your bearish bars are white. Okay, it doesn't matter because you'll know by where they open and close, and you'll catch on very quickly to that concept. There's a couple other important parts. There is the low of the bar and the higher bar of the bar. These are the absolute highest and lowest prices that these bars traded at during that particular session. Now keep in mind, this applies to whether you're trading a 1-minute bar or a daily bar, a weekly bar. Okay, the principle's the same. If you're trading a daily bar, well, this is the opening price for the day. This is the closing price for the day. This would be the lowest bar the market traded at for that 24-hour period, and this would be the highest price. Okay, there's also one other thing you need to be familiar with. You can see this little black thin line on the top and the bottom. Those are called like the lower shadow or the upper shadow. Sometimes they're also called like the tails or wicks. All right, just a little bit of market knowledge. Okay, so that's it. That's all the detail I need to get into. So I mentioned a minute ago, there's about 40 Japanese candlestick patterns. Some books say there's 43. Maybe there's some more, but those are the main ones. So what I want to do is, let me share the first one. This is called a doji. Okay. If you'll notice here, there's no body. Okay, remember a minute ago you saw kind of those big red and green bodies. What the deal is, this center line is telling me that the bar on the left side is the opening price. It opened here and it closed here on the right. It basically means that when that bar settled, okay, after, let's say, the daily bar, the price opened and closed at the same price. And what that tells you is that there is either indecision in the market or a complete agreement. In other words, consolidation phase. Now you'll notice that there could be different variations. The bars could be smaller like smaller in range. In other words, the range is from the low to the high. Okay, so sometimes, let's say a range, it might be 40 pips. Other times it might be 100 pips long. Okay, you'll also notice sometimes that the open and closing price might be more at the high end of the bar or the lower end. Okay, it doesn't matter. I don't get caught up on everything having to be perfect, but the concept is that the opening and closing price are the same in dojis. The second pattern I really like is what's called a spinning top, and you can see it looks like a little top, right? Like a little kid's toy. The characteristic of this is, you'll notice the body. If you look at the range of the body, it's relatively small. It probably takes up about 25% of the total range of the bar, okay? And you can have variations of this a bit. In other words, the bodies might be off-centered a little bit, and I'll get into that more in a minute. Okay, but once again, these bars are good because they represent consolidation in the markets. And what always happens in the market is when you have consolidation, consolidation is always followed by expansion. Expansion equals money because expansion equals volatility and price follow through price movement. So this is the way you make the easy money. Much easier than trying to fight the market when it's moving really slow. The other pattern I really like is, it's called the engulfing pattern. And in a nutshell, what's happening is here, let's say the market is climbing higher. In other words, it's making higher highs, higher lows. And all of a sudden, you notice this bar. Remember, the red bar is the bearish bar. It opened up in this area here. It tried to go higher. You can see the top of the wick is here. But notice what happened is that sellers took control very strongly, and they just engulfed all this upward price activity, and they closed strongly down on the lower end of the bar. That's an engulfing pattern, very bullish, or sorry, very bearish. The opposite is true. Market going down, 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 making lower highs, lower lows. Notice what happens. The market opens up here, down. It tries to open up lower, tries to trade lower for a little bit, and all of a sudden it turns on a dime. And buyers flood into the market, it engulfs all this bearish activity. That is a reversal sign. Okay, that's what I like to see because it represents a possible opportunity. Now this is a little bit of just a reference guide for you. As I mentioned, there's many candlesticks. You can look at this later on in your leisure. This kind of gives you an overview, especially for those of you who are new, at all the different candlesticks. But as I mentioned, I'm only focusing on the dojis, or a couple other patterns. So I've got about 4 or 5 pages of them. Okay, it's just a handy little guide for you. And also keep in mind that I'm going to make available a download of the slideshows so that you could actually print this whole thing out instead of having to pause and find all this stuff on a video. Whatever works for you better. Okay, now this is a very big takeaway on all this stuff. You have to understand that a candle pattern alone won't give you enough of an edge to make money. There's been some studies where they looked at all the different candlestick patterns, and I think even the best ones maybe gave you a 57% edge. So in other words, not a much bigger edge. In other words, like, let's say you have 50-50 chance of winning or losing. It might have been only like a 57%. So in other words, just a 7% edge over the market. It's not a great edge alone, okay? In order for candlestick patterns to give you a very high probability, okay, where let's say they're going to work out 70-80% of the time, you have to have what I call a master strategy. Now this is the great thing. With some time and practice, these trades can become your rainmakers. And what I mean by that is that once you understand how to put candlestick patterns within a master strategy, these can become very reliable patterns that can become your rainmakers. In other words, like your little money, ATM machine. All right, doesn't work all the time, but it can give you enough of a statistical edge that over time you can make money. So what I want to do is give you some real world examples of what these things look like on charts. We're going to look at a few charts of spinning top. This first example is the 1 hour Canadian Japanese yen. And remember, as I mentioned a few minutes ago, the candlesticks can be any particular color. And you want to make the candles, what suits your eye. In this particular example, the lighter green are the bullish bars. The dark green is the bearish candlesticks. Now, a very important thing to keep in mind is that while these are all spinning at top examples, notice that not all of them are identical. Sometimes the bars are shorter range, sometimes they're longer, sometimes, like you can see here, okay, the candle, it's a little bit offset, okay, it's not in the center. You can see here, these are more typical spinning tops, but I just want to show you that anytime you see this small body pattern, it represents some consolidation in the market. And I'll get more into that later, how you can take advantage of that. Here's a situation, okay, spinning top here, but this starts to become in another category which I won't talk about. This is a situation where you do have a spinning top, but the body starts to get a little bigger. Here, the body's starting to get almost so small that it's almost going to be a doji, okay? But I just want you to see how often these things, notice the market sells off very strongly. When you start seeing these small bodies in the market, it means maybe the market can't get lower. So you have multiple of these tops. Okay. You can see here, here, here. Okay. This is a 4 hour Canadian yen chart. And please keep in mind that if I didn't tell you what time frame this is, it wouldn't matter. These patterns would show up on a 30-second chart, a 1 minute, 5 minute, hourly, weekly, monthly. It doesn't matter. Every single time frame these bars will show up. So I'm not going to point all these out, but the thing is, when you look at this video, pause the chart. I want you, especially for your new, to notice how often these things show up, and keep in mind that every time they show up, there's a possibility for a trade. Okay? And what you want to pay attention to is, usually what will happen is after these bars form, within 3-4 bars, there will be some kind of new trade. Okay? And the trick will be to know which direction to take it in. One last example in the spinning tops daily New Zealand Japanese yen. Okay. Notice one here, big sell-off. Market selling, selling, selling. All of a sudden you've got all these tops coming to the bottom. It means pause, consolidation, big reversal. Market goes up. You start getting these little spinning tops. Market sells off. Can't go any lower, spinning tops, right? Market starts breaking out new highs compared to over here. It took out all these highs. Now what's happening is these tops are telling you, hey, okay, I made a new high. What do I need to do? Well, the market consolidates while it's trying to figure if there's more value in the market. In other words, it's like buying real estate. Okay, at some point, maybe the real estate gets too expensive in a neighborhood, so the price will be stagnant for a while. And over time, the market will consolidate. And eventually, if new buyers are willing to come in, then they can kind of break out of that previous plateau. Well, that's the same thing that's happening is you always have a phase of expansion, contraction, okay? Okay, do you guys know who this is? Now, if you don't know who this character is, he can make you rich, and let me explain. His name is Waldo, and what Waldo is, he's like a puzzle, okay? And it's like kind of a little game where you got all these fun little characters in here, and Waldo is hidden in the picture. Now, sometimes you'll find him very quickly. Other times you can sit here for 10, 15 minutes trying to find the guy. Now, I've taken the liberty to find him for you. He's in here, but if I didn't tell you, you might not find him so quickly. Now, here's the deal. Once I pointed it out, you'll always be able to find him in this particular picture instantly. But without understanding how to find Waldo, you're going to waste a lot of time and energy trying to figure out where he is. So here's the deal. When it comes to trading, these candlestick patterns are your Waldo. And the faster you can see your Waldo, the more money you can make. So now let's get into some Doji examples. This is a 1 hour in Bitcoin, and I want to point out it doesn't matter if you're trading Bitcoin, stocks, options, forex, indexes, ETFs, CFDs, spread betting accounts. These bars happen just as well. And I'm not going to go over all these, but once again, understand what's happening is you start seeing the dojis, and there will be different sizes, different ranges, in other words, lengths of the body. But notice when you start having the market started making new highs and you start getting a lot of dojis, if it can't go higher, it's possible it's going to sell off. Market sells off strongly, makes new lows. The dojis tell you the market's got to decide if this is the end of the sell phase or reversal. Okay? And notice it keeps making new lows, pause, more dojis, consolidation. Well, these aren't technically perfect dojis, but they're getting close. You got the back to the spinning tops. You got bars that are very close to doji. Okay. Once again, don't get hung up on textbook setups. Okay, because things in trading aren't always perfect. It's just you always have to ask yourself, what does the bar mean? Some more examples. Notice the market sells off, sells off, sells off. You get your little doji here. Okay. This is close to a doji here. All right. Very small. Open and close. Very close here. Right. Notice that this market, this was a crude oil daily chart. Market starts breaking at new highs. Consolidation. But notice how many dojis were happening, and then you kept making new legs up, right? Also notice on this chart how many candles or spinning tops there were. All over the place, guys. Okay. So once again, when you start seeing this, okay, market makes a new high, pulls back. It tries to sell off forcefully, right? But now you got a spinning top and a doji. And guess what? It says, okay, we can't go any lower. We're in agreement. It can't go lower. Maybe it'll go higher. All right. Let's look at the engulfing patterns. Okay, this is like an extreme, but the thing to remember on the engulfing pattern, and this is a 1 hour gold chart. Market opened up here on this bar. It tried to take out the lowest part of this market. But it rapidly, the buyers flooded and overwhelmed all this downward price activity. That is a very strong bullish engulfing pattern. Okay, it tells you that the buyers are in control, and that's when you need to start looking at a entry signal. Okay, notice here it's interesting. After this big engulfing bar, the market had to digest, and guess what? You got this little kind of spinning top, almost like a doji bar, right? Then it's exploded up, right? 4 hour USD Japanese yen chart. And I'm showing you some different variations because, you know, they're not all textbook patterns. See, I could give you a few like kind of, you know, image-based things or a few textbook patterns, but then you're going to miss out on a lot because there can be variations, all right? The idea is to understand the concept. The market starts selling off for a few bars. The bar opened up here, down here. It tried to trade lower, but all of a sudden you get a big bar that really kind of breaks above, okay? So whenever you have a strong reversal bar, it's getting close to like engulfing bar. It's strong enough to tell me there's been a reversal. Okay, notice here you got the spinning top. Okay, here you go, like market's going lower, 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 opens up down here, has a strong reversal. okay? Now keep in mind that sometimes when you do get a strong reversal bar, things don't take off immediately in your favor. Notice what happened is market comes down, but now it's consolidating. Notice we have Doji, spinning top, spinning top, spinning top, spinning top. So this market consolidated for like basically a day before it made a new leg up, right? Then notice here, you know, market made a double top here. And if you're new to trading, okay, that's a pattern I'm not going to cover, but it just couldn't go any higher. Starts to make new lows, spinning top, and then it sells off hard. Golfing pattern number 3. Notice here, market tries to go lower. It opens up here on the bottom of this green bar. Starts selling off, but buyers overwhelm the market, and then it starts a long leg, massive rally up, okay? Well, this is a 1 hour, so it's not massive, but still, this is the kind of thing you want to see. You know, it is over 100 pips from, you know, down in this area. All right, a little bit of homework for you guys. Okay, so it's time to take some action. What I want you to do is over the next 7 days, find 10 charts. And what I want you to do is find 10 charts that have examples of the dojis, the engulfing patterns, and the spinning tops. And print them out, and what you want to do is look at them each day. So the idea is you want to train your eye to find Waldo. The more you look at your charts, the easier it is to find, and it's like anything, repetition is the key. And this is such a big takeaway, I can't stress this enough. Here's the key to technical analysis. Is, as I already mentioned, forget the perfect textbook setups, okay? Because while I have to show you some textbook setups to give you the basic concept, there's too many people out there teaching that all they do is try to, you know, cherry pick the textbook setups, and then you wonder why you can't find trades in the real world, because they don't prepare you for all the slight variations. Okay, you have to understand it. It's kind of like we have a saying in the US, it's good enough if it's good enough for government work. Okay, it's good enough. And so what I mean by that is you have to say, okay, if it looks pretty close to a spinning top or doji, that's good enough for government work. So the thing that is more important than anything is you have to understand the logic of what's going on with the candlestick. So this is a critical question you have to ask every time you're looking at the candlestick. So when you see a doji, you have to ask yourself, well, what is this bar telling me? You have to ask yourself, well, what does it mean for the buyers? And what does it mean for the sellers? And as I gave an example a few minutes ago, for instance, I would tell you, okay, the market opened up here, tried to go lower, but now all of a sudden it's reversing strongly. So what in that situation would tell you is, okay, the sellers were in control early on, but the buyers really stepped in with force. So in that situation, not good for the sellers and great for the buyers. So you always need to ask yourself what's happening for both the buyers and sellers, and ask yourself, is this bar representing a pause in the market? And all the patterns that I've talked to you, especially the dojis and spinning tops, those are consolidation in the market. Okay, and they can represent a continuation or reversal, whereas the bullish engulfing and the bearish engulfing patterns represent a change in trend direction. So here's how to really stack the odds in your favor, and this is what I talked a while ago about having a master strategy for the candlestick patterns. So what you want to do is you want to look for high probability candlestick zones. The first one, this is when you find the candlesticks at a big number. And what I mean by that is, like, let's say the British pound over here could be trading at 1.5000. Maybe another market like, you know, trades at 0.9500, or maybe the euro 1.1750. The Australian dollar could trade at this number, okay? big numbers in stocks like $10, 25, 30, 50, 100. Okay, these are big round numbers. So let me give you an example. And this kind of ties in everything I've been teaching you so far. Notice here, this line here represents the price, big round number, let's say the British pound, 1.3000, and the low here is 1.2500. If the market is trading lower, 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 and all of a sudden you notice a bullish engulfing pattern and it happens at this big number, this gives you a much higher probability that it's going to have a reversal and climb higher. Much higher probability this if this thing just happened kind of on a non-big number. And guess what? These numbers are like magnets. So in other words, if it bounces off this big number, it's going to be magnetically drawn to the next big number above. So now here's the idea in reverse. Market's climbing higher, higher, higher. This 1.300 is going to represent resistance. And if you see the bearish reversal bar coming in, very strong chance it's going to sell off for a while. Okay, now you don't know how long it's going to sell off, so you have to become good at reading the market, and that comes into money management and stuff like that, which is a whole other topic. Let's use a couple more examples. This could be in the Australian dollar. Okay, market's coming up, up, up. It hits this big number, 6,500, can be resistance in the market. You start having some spinning tops. Remember I said that they can represent consolidation, which can lead to continuation higher or a reversal in the market. And the key here is that you have to read the behavior. If the market's climbing up but it consolidates at a big number, that's a clue that maybe this thing has hit resistance at this number. In other words, this market is as expensive as people are willing to pay at this time. Okay, so then you have to learn how to trade the breakouts of this thing. Now, once again, this is gonna, I'll talk more about it in a video number 2 and 3. If you look to the downside, here's the market selling off. All of a sudden we get spinning tops at this big number. This is telling us that the market is attracting buyers. People are saying, okay, you know, it's cheap enough for me to buy. I think it's a fair price to buy. So if you start to see consolidation in a down market, a big number, very high probability it's going to climb. Last example here, market's going down. Once again, the Doji's consolidation. It's saying, okay, buyers like this price. Okay, they'll probably start taking nibbles, so you're looking to go long. Same, market's going up, up, up. $10 is a very big, it's a magnet. The market's going to get sucked up into it, but also when it hits that price, especially if it's never traded there before, it's going to seem very costly. So it's probably going to have to consolidate. It might sell off for a while, and then it has to decide if it wants to go up higher. Okay. Let's look at a high probability zone number 2. This is significant past support and resistance levels. So let me explain what that is for you, those of you who are brand new. Okay. Now this bundles even more of the master strategy together and makes it even more of a high probability trade. Past support and resistance levels are, you'll notice that the market was here, goes down, starts to rally up, sells off. It bounces strongly, so it found support at this level at $5, okay? Goes up. It starts to break below that $5 level. Traders are seeing if they can take it lower, but guess what? It rejected going lower. The buyers stepped in, so now it found support twice. Goes up, goes down, up, down. Now it's testing this level for the third probability. So here's the deal, guys. You've had support proven twice. So the odds are if the market comes down, you find your bullish engulfing pattern here, right? It's going to go higher because you've got now multiple high probability things happening. You're at a big number. You have a bullish candlestick set up. and you've have proven support level. Okay, very high probability trade. Here's an example, same thing. Market found support once, twice, now it's trying to find support third time. We're at a big number, okay? Now a situation we got a kind of spinning top and a doji. Tells us that market's finding support, consolidation, agreement, and it's probably going to go higher. Same to the downside, the market's going up, tries to go higher through this big number, can't do it, it sells off, it tries to rally up one more time, but guess what? Now you got a doji and you've got a spinning top. That is what's called a double top pattern, okay? And odds are it's going to go lower. Now, you have to really understand the logic behind the zones and levels. First of all, major financial institutions move large amounts of money in these zones, okay? Because a lot of the order flows come in at these big numbers, like in the pound, like 1.25000 or 1.50000, let's say. Very easy for people like their customers to say, hey, buy at this big number, sell at this level, okay? Also understand that a massive amount of like trading volume from, once again, both the small traders and the institutions, okay, it can be the hedge funds, the banks, they'll buy at these big numbers, okay? Also, a lot of the stop loss orders and entry orders are placed in these zones. So what this means in a nutshell is that if you have a lot of orders at these levels, okay, it's going to mean that the markets are probably going to have a strong reaction, and that's what you want to make money. So if you're at a big number and you see one of your candlesticks patterns and like previous support resistance levels, just know that the institutions and lots of traders looking at those levels, so you're probably going to get a nice bounce off of that. So the cool thing is that these zones will allow you to trade with the smart money. And that's the way you want to make money, because that's basically, you're trading with the smart money. You're going to get much more momentum, and this is a whole lot easier to, you know, bank the pips versus sitting there in the markets just taking days, you know, hours or days to kind of go your way where you eke out 10, 20, 30, 40, 50 pips. You'll find that if you're trading with smart money, making trades 50, 100, 200 pips is much easier over a few days. So here's the thing about trading. As I mentioned, this is an introductory video. Okay, you have to all start somewhere. So on the top here, you know, on the iceberg, I've kind of given you a bit of the tip of the iceberg, but this is still, there's a whole lot more stuff to learn, okay? You know, keep in mind, you're not going to master trading in just like a short half-hour video or an hour, okay? I could spend a week doing a workshop on candlestick videos, but I'm trying to give you some of the kind of, you know, the cliff notes for this, kind of a little bit of cheat sheet to get you going. So what I want you to do is stay tuned, and there's more to come. And what I'm going to do is, and like I said, there'll be more videos coming. I'll teach you additional high probability zones. I'll teach you how to safely enter and exit your trades and to pull maximum money from them. Now here's the thing, you know, it takes, believe it or not, you know, this is like a 33-minute video. But it took me a full day to put this together. I mean, like 8 or 9 hours, because creating these slides is not easy. Trying to pull all the examples from where I need and put them together in a kind of a logical sequence takes a lot of time. And, you know, keep in mind that I'm sharing 25 years of trading experience. So, you know, it takes a lot of thought and effort to kind of boil things down that I know. But, so if you enjoy this, please do me a favor, click the like button, you know. And don't forget to subscribe to my channel, okay? And this is something I just want to leave with you. Okay, I know you all want to make money as fast as possible, but don't be in a hurry. Okay, what you want to do is focus on mastering one strategy. I'm sorry for this repeated here. I'm not sure why that happened, but the idea is you want to learn a few good patterns. In other words, learn to find Waldo. In other words, a few basic candlestick patterns, because those can be your bread and butter trades. Okay, as I mentioned, they can be your rainmakers. So anyway, once again, my name is Jeff Wilde. I hope you really enjoyed these videos, and stay tuned. Don't forget to hit the like button and subscribe. Talk to you soon.